Hello, and thanks for joining me. My name is Douglas McDonald. I'm a mortgage planner and real estate consultant with the Franklin Financial and Realty Group, and I want to thank you for joining me today to hear my brief market update. It's my goal to educate you as the future home buyer on trends in the marketplace that can help position you to buy a home at the best price for the least cost. In economic news today, today is Tuesday, February 27th, 2007. You should note that the Chinese stock exchange has dropped 9%. And what that has done and how it affects the housing market here is that it's actually caused a sell-off on Wall Street. And in turn, a lot of the Wall Street traders are now putting their money into bonds. What that means to you as the real estate consumer is that mortgage rates should be dropping here pretty quick. Maybe we'll see as much as a 0.25% drop in interest rates. Now, of course, rates are volatile. They move up and down every day. So I'll be keeping my eye on that and alerting you through email and through future market updates. One of the things you must know is that the San Francisco Chronicle, I work here in the Bay Area in Solano County, has reported that the Bay Area home sales have been on a 24-month slide. And this is from the Chronicle dated Friday, February 16th. I saved it because it shows that in Solano County, where I work, in Vallejo and Benicia, that housing prices have actually dropped 5% on a year-over-year basis from January of 2007 compared to January of 2006. What this also translates into is a 10% drop in home sales. So this positions you as a buyer with a great opportunity, especially if they're correct in their estimate that the market may be leveling off. And it's true that it may have, because in other quarters of the economy, we also hear the same words repeated. In this article from Originator News in their February edition, the National Fannie Mae's chief economist is now reporting that the worst of the housing slowdown is over. And he sees basically that prices should begin to turn around. But for the year as a whole, prices will be down 1 to 2% on a national basis. And that is true, and I actually believe in the Bay Area they'll actually drift down perhaps a little further. We're a little behind the national trend because of the huge appreciation that has occurred in the market. And I foresee by this summer, prices really bottoming out and starting to flatten out and turn upwards towards the end of the year. In the mortgage industry, you need to know that there's been a huge shakeup in the subprime market. The New York Times, here in its Sunday, February 18th edition, shows that the investors on Wall Street that have bought these pools of mortgages from subprime lenders are those lenders who provide money to consumers who have poor credit or little down or both. And these mortgages are defaulting in record numbers. And what that means to you as the future home buyer is when you go to apply for your next mortgage loan, the guidelines might be a little stricter this year than last, which is good on a whole because it creates a resiliency in the housing market and less precariousness to national investors, which will actually strengthen the economy and the housing sector overall. But we will see a shakeup in the housing market. As a result of this, there will be a higher number of foreclosures and short sales. Traditionally, when you saw foreclosures and short sales in years gone by, that meant it was a great deal, that there was some equity to be had and some negotiating room. But what's happening in this turnaround is that because a lot of people came in with zero down and also were put into loans that were way beyond their means, unfortunately, there's not a lot of equity in those properties, and in fact some of them are upside down. So at best, with these short sales and foreclosures that you may be interested in, they're not going to be as tasty as perhaps they once were with lots of equity because of the decrease in home prices and the highly leveraged position that a lot of these borrowers were in. Now finally, I want to point out that the old Fed chairman Alan Greenspan, came out on CNN Money and reports that he predicts a recession in the economy by the end of the year. And in fact, Economic News Today, the durable goods order came out, which is an indication of the overall health of the manufacturing sector in the economy, and it was actually 7% less than what economists expected. That really pushed a lot of economists and investors back on their heels and actually made them pause and start to scratch their head, concerned about what that means for the economy, a slowdown in general. Well, as a result of this news and the economy slowing down, and the international markets where China is sold off about 9% of its value in its stock exchange, we're certainly going to be looking at a rate cut by the middle to the end of this year from the Federal Reserve. What that means to you as the home buyer is that you can look forward to lower rates. Now, how can you take advantage of this to maximize your purchasing power? Well, in essence, this is how it breaks down. There's a glut of homes on the market today. There's not a lot of buyers. All indications from national sources, reputable, are showing that the bottom of the market is fast approaching if it isn't already here. Also, lending underwriting guidelines are becoming more strict. Not as strict as I think they will become. So really, right now is a great time to start to look at the housing market seriously to see if you can pick some of this low-hanging fruit, because I'll tell you, by the summer, what you're going to see is a lot of other people getting this news and putting the pieces together like I have just done for you, flooding the market. As rates come down, more buyers will come out. And unfortunately, what we're also going to see is a lot of these houses that are sitting on the market are actually going to be taken off the market because they didn't sell, or just absorbed in the marketplace through natural absorption. It should be said that national housing starts are up. More homes actually passed through hands this past month than any month previous since last summer. There were about 62.4 million units sold. They only expected 62.2. It doesn't sound like a big difference, but in terms of economic news, it really is. So there are more and more buyers coming out. So if you really do want to take advantage of these indicators and these trends, I would, quite frankly, email me at the email provided in this email message, and let me know what your plans are. Let me know what your thoughts are, and let me know where you'd like to buy. In fact, if you respond here within the next week, I will provide you a personally crafted home loan report that will show you your options so you can start preparing yourself to get ready to take advantage of the shifting market. Well, thanks for spending a few minutes with me. Please click the movie below. I will next show you a quick tour of several of the finest Benicia homes that have stainless steel appliances and wood floors in price ranges from $300,000 to almost $700,000. So thanks again, and I look forward to speaking to you next week. Bye-bye.